Not all bad news is all bad. The side effect of a super soft jobs report and rising unemployment is lower mortgage rates. Hi, I'm Skylar Olsen, Chief Economist at Zillow, and this is Market Trends, where each month I'll help you unpack what's happening in the housing market. Newly lower mortgage rates does bring an opportunity for those ready buyers. Mortgage rates had remained stubbornly high, but we've already had some relief as financial markets start to expect the Federal Reserve Board to act soon. Now, the Fed doesn't set mortgage rates directly, but they do use a broadly influential interest rate, and that has been set higher in order to tamp down on inflation, and that's been going on for several months. Now, to avoid hurting the broader economy, and now that inflation is more in line, the Fed is broadly expected to drop that influential rate in September, well, maybe December. In anticipation, average mortgage rates are already down 3/4 of a percentage point since just May, only a little over 3 months ago. Now, that translates to over $140 less a month on the typical US home, now valued at $362,000. For my fellow Seattleites in our more expensive market, the drop in mortgage rate since May would save a buyer over $300. Now, let's put things another way. With a drop in mortgage rates, your buyability, or the size and price of the house you can currently access, just increased. If a buyer could just barely afford the typical US home on May 2nd, when the average mortgage rate was 7.22, now that rates are down to 6.5, that's an extra $28,000 in buying power. Now, higher buyability means the potential to buy a bigger place in a better area, or a property that will need less time and energy to feel truly yours. The next question you might be wondering is how long lower mortgage rates will last. Now, the reality is mortgage rates jump around a lot, but if current rates continue, then the worst is likely to be behind us. Mortgage rates will be more likely to bounce around, say, 6.5% than 7% these days. And if unemployment worsens and we do see an urgent rate cut from the Fed in September, mortgage rates could come down a bit more. But keep in mind, any sign that there's still some fire behind US job markets and those inflation numbers, and mortgage rates could swing back up. So the truth is, I just can't guarantee that 7% mortgage rates aren't out of the question in the future. So if you're a buyer and you're actively shopping, this could be a sweet spot of lower mortgage rates along with slower home price growth and slower paced home shopping this fall. You should be pre-approved and get ready to share a bit about your current situation with a lender so that you can move quickly and move forward on the right options for you. Be sure to subscribe to our channel on YouTube and our Market Trends newsletter for all of our housing updates. And good luck out there.